Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's take a look again in euro currency. So in general, yesterday I have talked a lot about the CPI report as well, it would be better to not gamble on a possible result. But technically we said that on the 4-hour time frame chart, the overall price performance were standing more in favor of the bullish actions because it brings some signs of the bullish dynamic pressure, and as you can see recently, a bit later, the CPI numbers have confirmed that. Yes, we see some decreasing of the CPI numbers, but this is a natural process. We will take a look in the components of the CPI in our weekly report. Now, just in two words speaking, we'll see how the war component, the war premium, is gradually housing from the inflation. So, because initially, when the special military operation has started, it was really big premium in commodities. That was really the majority of the overall rising of the prices, particularly in the hydrocarbons. Currently, this premium slightly and gradually starts eliminating, and inflation is coming to the other spheres, the level of the other spheres. This house market, medicine, food, and so on. Additionally, overall global economy slowed down right now, and that makes additional deflationary effect. So we will talk about this in more details in the weekly report, but that's major reason why we see it gradually slow down on the inflation. So that was supportive for other currencies and dollar rivals. Euro has made this upper direction, reaching resistance 103.60, 103.70, major 50% level of the most recent downward direction. And take a look, it has touched the overbought area. So now it shows the minor pullback, but if we'll take a look at the 4 time frame chart, we're returning back to the idea of this ABCD pattern. You could see that the OP target has not been reached yet. And with this recent pullback, now euro stands not at overbought. So actually it could try to keep going higher. So this is very important event, I mean the CPI report, for Fed policy, and it should make long-lasting effect on the markets. And that's the reason why on the euro currency we have reasons to suggest reaching of the OP. Maybe not today, but within the nearest time. So the OP might be finalized with this ABCD pattern. So that's approximately what we intend to keep an eye on. This target on 102.20 approximately, 104.20. So this is what about the upside target. On the hourly chart, so we see this retracement back to the confluence on the hourly chart. It's interesting, by the way, what extensions we have here with this inner to butterfly ABCD pattern. So yes, this here, as you can see, another reason why the pullback has happened. You can see market hits the XOP as well, inner to the butterfly pattern. So on the hourly chart, you could consider two levels. So first, if you intend to take the long position, this is the first one, is confluence. Next one is 618 level. It's around 102.30. 618 support. So here only one option exists. Either market will start up prediction right from here, or it will be kind of ABCD pattern with a deeper retracement. Taking into consideration that the breakout just has started and we have fast acceleration, well, it's more reasonable to suggest that should be some upper continuation right from here. Besides, market stands very close to the OP, and the major retracement after COP already has happened. But at this moment right there, and it's difficult to say definitely, but it might be the ABCD pullback. So from that standpoint, if you intend to take a long position, you could either initially place stop right there below the zero with the taking position at confluence, or you could wait for the reaching of this level, or as usual I recommend in such circumstances when you in general you know the direction but you're not sure with the entry point, you could split the position in parts. So you could take some part here. If it will be ABCD, you could take another one right there. So that's what we have currently on euro currency. At this moment, I think that it is, well, not good background for considering taking the new short positions. So at this point, we need to see when the market will reach the resistance, complete the target, and only after that we could think about bearish positions, what will happen around this level, because when the market will touch it, you will see that we get big Gartley's triple to sell right there. So, and at least the 30% pullback here has a good chance to happen, especially on the background of the long-term bearish momentum. In general speaking, if we're speaking about the longer-term perspective, recent CPI report slow down on inflation. It means nothing in the balance between euro and the United States dollar. Anyway, the performance of the United States dollar should be stronger, and we do not see reasons to change our long-term expectations by far.